All right, welcome everybody, welcome to session number 3. So if you are online, please go into Moodle. You can pull up the presentation, it's out there, publication 4011. And then the tax return practice scenarios are also out there for you to pull up as well. And then in module 9, there are a bunch of draft forms as well that should be available to everybody as of a few moments ago. If you're here in person, make sure you grab your nameplate and then give that back to us when you leave. That way we know you were here. As well as we've got old 4011s there, if you're welcome to borrow one of those, as well as blank forms. So we are gonna do real tax stuff today, which is gonna be awesome. So just to kind of review the schedule today, we're gonna talk about deductions and adjustments and credits for non-resident aliens. Then we're going to go through general income tax forms. This is going to be the first kind of like, we're really doing it sort of a day. Let me see, I forget it. Is it H? No, that's fine. Whatever it is, how do we hide the silly controls? Hide, Control, Alt, Shift, H, good Lord. Okay. So we're going to talk a little bit about the plan for the IRS test, Moodle homework, and then we're going to be done because resident last time on top of the non-resident was a beast. We finished off the resident course session 2 materials last night. It would have been a 3+ hour session if we'd all done it in one. So we're going to break it out. We're going to do our resident section next Monday is when we're going to do that. So it is Thanksgiving week, but it is Monday of Thanksgiving week. So hopefully that will be okay for everybody. Everything will of course always be recorded. So if you can't join us live, it's no problem. Just watch it whenever you have a chance. All right. So usually at this point I talk about, hey, here's the 4011. Just so you know, kind of the version that's out there on the website, the published version, right? It's not updated yet for OB3, so there's some stuff that's wrong in it. We'll see that when we get through things today. We're also going to just do a couple of double checks on some of the treaty info. Looks like they've got some stuff updated from last year, but maybe some stuff that wasn't updated. So we just want to go through that one more time and make sure it's all good for everyone to use. All right. So a little feedback to all of our volunteers that have been going through the 8843 form. So the most common issue is the counting of days, right? It always is a challenge. I would say the biggest thing, right, is that we have to count any part of a day. So when I say somebody leaves on May 1st, that means that they were here for part of May 1st and we count May 1st. Or if they arrived on August 31st, that means they came in on August 31st, so that counts. If you are using Excel to do the math for yourself, you have to make an adjustment in the formula, because if you just do entry date minus exit date, it's going to be 1 off. And there were a lot of people that were either 1 off or 2 off if somebody was in and out, in and out. So either do your exit minus your entry plus 1. You can also enter like an alternate date, like the day before, but that's kind of gets confusing. Make sure on lines 9 and 10 down at the bottom, you do the name of the school, the address of the school, and the phone number. So there were a decent number of people that had like 2 out of the 3, which ain't bad, but it was not quite all of the pieces for all of those questions. All right. Not going to give any more stuff away because there are still folks working on that. I will throw out a quick request though. I don't know if you can tell from here, right? But some folks are using a different software. I'm not sure what it is, but the font is definitely a lot harder to read, particularly when we get into the numbers. So the one over here on the left, the numbers all squished together. I grant you, I am old, my eyes are not as good. But standard Adobe Acrobat uses this brown Courier new font that is bolded. So if you can, please make sure you're using that. That would be much appreciated for myself and the IRS scanners that would be using the software. All right, I see a couple of chat things. I'm going to just check those really quick. Okay. Yes, so the forms are 8843 one at a time. So you have to wait to do the second one. So basically that's kind of on purpose, right? Everybody does the first one. There's like a rare unicorn or two that manages to get everything right, but almost everybody has something wrong. Some people have a few more things wrong. So we do that. Then by the time the second one comes around, generally that is good. So it's kind of why we're doing it as an iterative test or an iterative process. If you're in your Moodle and you're not seeing any assignments, one of the things you can do on your dashboard is make sure that your timeline shows everything instead of just showing what's in the next 7 days. So if you're behind where you should have been, like you got behind a little bit, you're not done with one of the surveys or the practice, do the all, and then that will then show up everything that you're supposed to be doing. So if you can't find anything, you're not sure what to do, that's an easy way to try to like refresh the view of it so you see everything that's going on there. All right. Okay. So the next thing, Control-Alt-Shift-H, there we go. Okay, so everybody now has access to a couple of questionnaires, or at least one questionnaire. So hopefully most folks have registered for classes by now, or at least you have your goals of what you want to register for if things are still open. So now is the time where we start to put together, sort of finalize our plan for tax clinics. So there is a survey out there. It just says, when are you generally available? Like Monday, morning, afternoon, evening, Tuesday, Wednesday, all the days, right? This is not like a hard commitment, right? This is just like, I know I'm going to have classes on Monday, Wednesday afternoons, don't put a check there. This is really most important when we look at scheduling in-person events, because everybody is associated to a group based on the organization that's located near where they are. So if I see that, none of the Mankato folks are available on Wednesday evenings, I am definitely not going to be scheduling any tax clinics down in Mankato on Wednesday evenings because there will be no volunteers to work those. So that is kind of how we use it. Again, it's not like a hard commitment. It just kind of lets us have a feel for, what are people's availability. So, and we ask if you can have that done by November 30th. So not this coming week, but like that Sunday after Thanksgiving. Have your feedback in, that would be great. For the NRVTAP volunteers, you wonderful, wonderful guinea pigs, thank you so much. I mentioned at the beginning, right, that we're evaluating a pilot for an alternate volunteer readiness check, right? So as we do our training here, we're going to do the training, we're going to take the IRS test, we're going to do more training on software, we're going to train on states, and then we do the volunteer readiness check, which has a quiz, and then you prepare a couple of returns. And the returns are like we did today or the past week with like, okay, here is NICS form 8843, and here's the scenario info. And they just are, more details in the scenarios because we've covered a lot more material at that point. That's kind of the standard process that everybody's going to do and that you can do if you like. But we're also doing a pilot where you could instead volunteer at 2 in-person clinics in February. You would use the traditional model for preparing returns. So somebody would come in, they would give you their documents, you would go in, you would prepare the return in the software, and then a highly experienced quality reviewer, probably me, would be there with you, answer any questions, and then I would come do the quality review to make sure everything is correct. This is actually kind of the traditional way that most VITA clinics train their volunteers. They do some training up front, but then they get kind of a lot of on-the-job training by having volunteers prepare returns, knowing that they have really good experienced eyes coming afterwards to check everything to make sure it's right. So if that sounds like something that you're interested in doing, please let me know. We're going to structure appointments. We'll give you access to signing up for clinics based on what you prefer. It is totally your choice. Either way is good. Think about whatever you would like and provide some feedback, please. All right, this is the Lincoln Learn website. That is the website address right there. It is still not live. So we are waiting and waiting and waiting for them to make it live. The government is back in business. People have been back at the jobs for a few days. So I'm hopeful that Maybe we'll get it next week. That would be my big hope. If not, then it's probably going to be right after Thanksgiving, so that 1st of December. But we'll see how it goes and adjust from there. Whenever it does go live, your job is going to be to create an account. I will send out an announcement to everybody, hey, it's up, go forth and conquer. Create an account, take the standards of conduct test, take the intake interview and quality review test. Please do not take the foreign student test. Usually there are some number of bad questions. We really don't want you to get the question wrong by getting it right. I will provide additional feedback based on like how it turns out the IRS is grading those questions. So sometimes I think, oh, that should be right. And no, it's false. So we will deal with that and we'll get IRS feedback about how to move forward. All right. Any questions on that? Okay. Let's do a quick review of income. So for non-residents now, right, only US income is taxed, right? So if it happens outside of the United States, it's like Vegas, right? Whatever happens in Vegas stays in Vegas. What happens outside stays outside. We don't care about it. If you are working here in the US as an employee, you're earning wages, and those wages will be taxed as a non-resident. You may get a treaty that exempts a certain amount, either a small dollar amount for some people or for students, or an unlimited amount potentially for teachers and researchers. That may or may not get reported on a 1042-S. Remember, the ability to claim a treaty is based on you're a non-resident, this is your visa type, you're a student, you're a teacher, and this is the country that you're a resident of. It's based on the type of income, right? It's wages or scholarships, but it's not about the form that that income gets reported on. If you get a scholarship, that is going to be tax-free for everyone, resident and non-resident, as long as that is for tuition, required books and fees, you're a degree-seeking student at an eligible institution, which like all of our partners are. Treaties may exempt it if it's spent on other things. If you're from the Commonwealth of Independent States, it only is exempted for if it's for living expenses. For everybody else, you know, spend it on spring break, spend it on whatever, it's all good. For everybody else, though, it is taxable. That includes US residents. They will all pay tax on that money. They get no treaty benefits. If you are self-employed, if you operate your own business, that income can get reported on a 1099 NEC or 1099 miscellaneous. Those are out of scope for us to assist with, though, unfortunately. We don't see a lot of them, but there are a few that come in, and we will point them to some appropriate resources on the IRS website. If you have a state income tax refund that you got during 2025, right? So you filed a 2024 return. Hypothetically, maybe you were late and you filed a 2023 return, but that money came back to you in 2025. If you itemized on that federal return and subtracted your state income tax, and that affected your tax return, then you have to add the amount of your refund back in to your income in 2025. If you are dabbling in the investment world and you have dividends or capital gains income, those are generally going to be taxed at 30%. So it's a pretty high tax rate. Sometimes treaties can be a little bit lower rate, but that gets quite complicated. However, if you have bank interest or say a bonus bank interest for opening a new account, that is not taxable and not required to be reported anywhere. All right. When we think about our tax treaties, right, we think of it as a kind of a hierarchy of references, right? Like the original text, that's the gold standard. That's like what it actually says. Publication 901 has a summary. The 901 tables have a higher level summary. And the 4011 is like completely summarized to like 3 words, basically. So as we look at it, sometimes we need to kind of go back through that table to understand, like, does this apply? What are the year limits? All of that kind of stuff. 1042Ss are usually used for reporting treaty exempt income or income that has a special withholding rate. That can be wages for students or wages for teachers and researchers. It can also be scholarships and fellowships, such as Code 16. Non-residents that are not treaty exempt for a scholarship and fellowship, they will also commonly receive that 1042S with a Code 16. It just says, hey, congratulations, you had a scholarship. It's taxable. We took out 14% to cover the tax because the IRS makes them take out 14% rather than taking it out at like graduated rates like they do for wages. All right, our friends, the Fabulous Six, right? If you are here as a teacher or researcher, as long as you're here for 2 years or less, you're super good. You don't have to pay any taxes. You stay 1 day into that 3rd year, you pay taxes on everything. Canada, they're the threshold, right? You cross the line. If you earn more than 10,000, you pay tax on everything. Earn less, you pay tax on nothing. Germany has that same sort of retroactive treaty benefit for wages for students. China has an additional year for teachers and scholars. For 3 years, they don't have to pay tax on anything. And for students, that $5,000 gets to continue as long as they are students. So super good deal that they get. All right. Any questions on that before we go into new things? All right, so this was our equation here, right? Income minus adjustments, deductions, and exemptions equals taxable income, takes the time or rate, get your tax, subtract credits, withholdings, estimated payments to find your refund or amount owed. I said that treaties can change all of these things. We've talked about some of those. Our dear friend, the OB3, right, that affects all of those things as well. And when we talk about a lot of these adjustments, deductions, exemptions, and credits, right, this is back to that same idea of social engineering through the tax code, right? Hey, get married, have some kids, go to college, buy a car, like all of these things will give you some money off on your taxes. The one sort of advantage of this for non-residents is that generally, right, a lot of those things that are put in place, they're put in place for appealing to certain demographics of the voting population. So non-residents can't vote in any of the elections. And so a lot of the chaos and things that goes on in the general resident tax code, sometimes the non-resident world kind of skates under it, and they are not as impacted by a lot of the changes that happen. And so we'll see that here, is there are a few things that are affected by the OB3, but it's not hopefully as much as like some of the resident taxes are. All right. Okay, so let's talk about adjustments. So if you get a scholarship, and let's imagine somebody just gave you $10,000, and then you had to go pay for your tuition yourself. You were a grad student, so you paid like $5,000 in tuition fees and another $1,000 in additional lab fees, for example. But then you had $4,000 and you spent that $4,000 on your living expenses, rent, food, all that kind of stuff. So you could report that $10,000 as income and then make an adjustment and subtract $6,000, right? Because that $6,000, $5,000 was qualified expenses, and $1,000 was also qualified expenses, right? Those required lab fees. So it nets out to just be $4,000. And a lot of the time, when we get a document from a school, they will have done that netting for us. But if any of our clients spent any of their own money on qualifying education expenses, they can subtract those as well. So, right, so they got a scholarship that paid for all of these other things, but then they bought textbooks from some other place, or there were some required equipment that they had to buy for their lab class. They went and bought from Amazon rather than the campus bookstore or something like that. Those would be examples of where qualifying expenses could be subtracted as well. Educator expenses. So if you are a teacher working as a teacher in a K-12 education environment, you can subtract up to $300 of money that you spend on like supplies and materials for your classes. But that's only available to you if you work at least 900 hours as a teacher in a K-12 environment. So generally, that's not going to be something we see most of our non-residents doing, but theoretically possible we could have somebody there. If you have a CD, you say, okay, bank, here's $1,000, keep it for a year, give me 10% interest rate instead of the 2% that you're giving me normally. And they say, yeah, that's great. But then, if you want it back before then, I'm going to charge you a penalty of like 3 months of interest. And if you take that money back early and you have to pay that penalty, you can subtract that penalty amount as an adjustment on your tax return. If you make an IRA contribution, an individual retirement account contribution, you can also make an adjustment, subtract that as well. That is not a very common thing that we see for our international students, but theoretically, it would definitely be something that they could do. We do see some student loan interest, particularly I think now we may see a little bit more because a lot of the pauses on repayments have ended. So basically, it's going to be for school costs incurred at the time of the loan, reduced by any qualified scholarships. The limit is $2,500. It's not available to married non-resident aliens because you can't be using the married filing separate status. You have to use single status. But if you're married, you have to use married filing separate. So you're just kind of not able to claim it. They should receive a Form 1098E, which shows the amount of the interest that they paid. So we'll probably see 2, 3, 5, something like that during the course of the tax season. So a few of them. All right. The one thing that we may see as well is this new car loan deduction, right? This is another fabulous OB3 thing, right? It is an additional deduction / adjustment. It's going on that Schedule 1A. A new car, if you bought a new car that was assembled in America and you paid interest on a car loan for that new car, you can subtract the interest, a portion of the interest that you paid. Theoretically, there should be a statement from the lender that says how much interest was paid. It may just be an end of the year statement. So that is kind of part of what is being figured out hopefully by the IRS as we speak. This is what that form looks like right now. So this is a draft form. It's not the real form, but you can basically see there's a spot for the vehicle identification number. Obviously, they're going to be attempting to match things up, possibly. And then you would enter the interest that was paid. And then there's a calculation that TaxSlayer will do for us to figure out how much was actually going to be adjusted down. All right, so those are adjustments, right? So we say income minus adjustment, so money that you spent on certain things. Then we subtract deductions. And for deductions, there are two. It can either be a standard deduction or itemized deductions. So for everybody that was with me last night, sorry that this is a bunch of repeat, but same concept. We'll just go through it. It's a little bit simpler for us. So the standard deduction is a set amount, right? You don't have to pay tax on. It's generally not available, though, for non-resident aliens. The only people that can get it are students and business apprentices from India. That's just what their treaty says. They're the only ones that put that particular clause in, so they get that, nobody else does. This is claimed instead of itemized deductions. You can do either one if you're a student from India, right? Whatever one is going to be better for you. The amount is $15,750 for single or married filing separately. In the current 4011, it says $15,000, right? This is where that OB3 update is not made in the 4011. So when you see things, keep that number in mind. When we get to the tax clinics, we will make sure that the 4011s that you have access to do show the right numbers for you. All right. There are a very, very big list of potential itemized deductions for residents. But for non-residents, that list is much smaller. It is essentially state and local income taxes. Now, the amount of that has gone up considerably. It used to be up to $10,000, $5,000 if you were married filing separate. Now it's $40,000, $20K if you're married filing separate. That includes the taxes that were withheld on your W-2. Also, if you filed a state return and then you had to pay extra when you filed because you owed money, right? You paid that additional state income tax during calendar year 2025. So for all of this like state income tax, what matters is not like the year that it's supposed to be for. It's like, when did you actually make that payment? I paid in 2025 for my 2023 taxes, or I paid in 2025 for my 2024 taxes. Charitable contributions are another itemized deduction that is allowed, but it has to be a US charity. It cannot be a charity that's based outside of the United States. Out of scope for the VITA clinic, but they are still eligible, would be casualty and theft losses in a federally declared disaster zone. So a hurricane or the wildfires out in California.
지금 네가 너무 괜찮아.
Yep, somebody's talking there.
전했던 나의
Okay, let's see if we can get you to mute yourself, please, okay? There we go. Thank you. All right. All right, let's try that again. Here we go. Okay, so, all right. Federally declared disaster zones. I don't know that we're going to have any big ones this year. Hopefully we don't. But if we do, we will have to send those folks somewhere else because it is out of scope for us. We can't help them. We're not going to train on it. But if something bad happened, there would at least hopefully be the potential they could get something, the losses deducted on against their income. All right, moving on to credits. Credits are also much easier, right? They don't have to be nice to non-residents because they're not going to vote for them. So they don't do a lot of the same extensive list of credits that are available for residents. For education credits, non-resident aliens are not eligible for the American Opportunity and Lifetime Learning credits. So those are the two big education credits. Non-residents just don't get them. Not at all. So it's very simple, very easy. We're never going to get them. So the form 1098T is a form that the university provides. It says, hey, Maria, you were a student here and we gave you this much in scholarship and you paid us this much in tuition and fees. Some universities hand those out like candy to everybody, kind of independent of their tax residency status. But independent of that, right, if they're a non-resident, they still can't claim the education credits, even if they get this 1098T, right? That form does not guarantee eligibility for a credit or not. So that's kind of a theme about non-residents, right? The form does not guarantee that you get something or that you don't get something. It just says, hey, here is information. The other common tax credit is the earned income tax credit, right? It's a low income tax credit. If you work and your income is not high, particularly if you have a family that you support, you can get more money back as a credit than what you pay in taxes. Non-resident aliens are not eligible for this one as well. So our life is relatively simple from those two big ones. There are a couple of credits that possibly might be eligible. One of those is the child tax credit. So non-residents who have a child they can claim as a dependent can claim the credit. So it's a very, very limited subset of our clients, right? The taxpayer must be able to claim the dependent. So they have to be from Canada, Mexico, a student from India, or from South Korea. So only those 4 countries can have some person claim a dependent if they're a non-resident. At least one of the parents must have a social security number, the one that's claiming them. And then that child must be eligible to be claimed as a dependent. So it's like a handshake, right? The parent has to be able to claim them, and the child has to be eligible to be claimed. And to be eligible, they have to be a US citizen, national or resident alien. They have to have a social security number. They have to pass the age and relationship and living with the parent test. Generally, this means that if an international student family came here, like on a PhD, and the wife had a child here in the United States, they might be able to claim their child, right? If they were from Canada, Mexico, they were students from India or South Korea. There will be a lot of other students that say, oh, well, I am from insert whatever other country you like. I have a child that was born here in the United States. Can I claim them as a dependent? And the answer is no. because only the treaties with those 4 countries include the ability to claim a dependent. The credit for other dependents is almost identical to the child tax credit, except that those individuals can have an ITIN instead of a social security number, but they still must be a US citizen, national, or resident alien. I can think of like a few crazy scenarios where the parent has not been in the US long enough to become a resident, but the child is not a citizen, but has been here long enough to be a resident, right? It's like, okay, they came here with one parent and then the parent left and then the other parent came in, right? That would kind of round robin do it. But that is kind of a theoretical idea. From a practical perspective, I haven't seen that happen. Usually, if the child is here long enough to be a resident alien, then the parents are also resident aliens as well. The child and dependent care credit is kind of the same way, except that you have to still claim the child as a dependent. You also can't claim it when you're using the married filing separate status. So now we're talking about a single non-resident alien individual from Canada, Mexico, India, or South Korea that's come here to study or do research or whatever, that has had a child, but they're not married. They're here all alone with their child. Well, that might be not alone. Maybe their other family is here. But again, that becomes a theoretically possible scenario, but relatively unlikely to actually occur. Not impossible, but just not very likely. All right. So all of that to say, we do not see a lot of credits on federal tax returns. All right, let's talk about a couple more taxes, Social Security and Medicare taxes. So Social Security is government pension, right? Old age pension. Medicare, government old age medical insurance. How do we pay for these services? So if you are working as an employee, you pay half of that out of your paycheck. And then your employer also matches that. They pay half. If you are self-employed, you pay both sides of it, both the employee and the employer side of it, and you pay all of it when you file your taxes. Now, non-resident aliens on F1, J1, M1, and Q1 visas are exempt from Social Security and Medicare taxes. They do not have to pay those taxes. If somebody takes those taxes out by mistake, they can get a refund of them. Usually, the universities are really good about knowing if somebody is a resident or a non-resident alien. They know what type of visa they have, and so they don't take out those taxes by mistake. However, people that go off for an internship and they work for some other company that maybe is not as familiar with those requirements, they often will have Social Security and Medicare taxes withheld. We can help those students in that situation, but we help them kind of over the summer rather than during the main filing season. So if you see anybody like that, let your site coordinator know and we'll try to connect them or connect with them later. So, however, non-residents on the F1, J1, et cetera, don't have to pay the taxes. However, once those individuals are here long enough to become resident aliens, they will start paying those taxes. So students that are here for more than 5 years are going to pay those. J1 teachers, researchers, et cetera, once they pass that 2 years of exempt status, they will start counting their days, they'll be residents, and they will also need to pay those taxes. Spouses and dependents that are here on -2 visas, no matter whether they're resident aliens or non-resident aliens, they are going to pay Social Security and Medicare taxes. Individuals that earn income in violation of their non-immigrant status also will be paying those taxes as well. So not a common one, but just in case we ever see it. All right. Any questions about those before we continue on? All right, so let's talk about the forms, right? So we've kind of gone through the concepts of like, this is income, these are subtractions, adjustments, deductions, credits, right? Those were relatively quick. Now we're going to talk about like the tax forms themselves and like, how is it supposed to all work? So most important, right? Who has to file a tax return? So when we say a tax return, we mean like the full 1040 NR set of forms. A Form 8843 by itself is not really considered a tax return. It's like an informational form. So you have to file a tax return as a non-resident if you have any income that is taxable here in the US. There is no set amount where if you don't have anything more than that, you don't have to pay a tax, like residents. For the US, if there's any income, you have to file a form. It doesn't matter if it is exempt by treaty and partial or total, even if you get no refund, even if you don't owe any tax, you still have to pay, you still have to file the forms and report that income and report the treaty if you're claiming one. If you earn income in violation of your immigration status, you still need to report your income and pay taxes on it as well, right? That is how historically the government has gotten some bad actors out, like Al Capone and all of the bootleggers during Prohibition. They couldn't catch them for running alcohol. They caught them for not paying their taxes. So, all right, when we look at the forms, so the 1040 NR is kind of the main summary form for the non-resident taxes. There is also a Schedule OI. And the Schedule OI stands for Schedule Other Information. And it has a lot of the same information that is on a Form 8843, but a few other things as well. All of those two, the 1040 NR and the Schedule OI, we are going to file one of both sets of forms for every non-resident that we help. They're always going to get those two forms if they have to file a tax return. There are some additional schedules that they might get, but they will only get those if they apply to them. And those are and I need to add the other one. So it's Schedule A, Schedule NEC, Schedules 1, 2, and 3, and now the new one that's in draft form, that's Schedule 1A with all of the OB3 shenanigans that are going on. All right, so if you're here in person, that's what all of these are up on the front row. You can make sure you grab one or more of them. If you're online, that should be in module, I think it's number 9. We have the draft forms of those out there. The real forms, the links to what will be the real forms are up in the reference information. It's only 2024 forms now. The real ones aren't released yet. So the draft 2025 is down in module 9. The live links for the active forms are up in the reference information. So when they start populating those final forms, those will become the correct versions. All right, so what are on all of these forms, right? 1040 NR is kind of the general form. It's basically the summary form, right? We have all of this other supporting stuff and all gets kind of plopped onto the big 1040 NR form. That's where the actual calculations of things go as well. Schedule 1 is additional income and adjustments. So all kinds of different types of income and then any adjustments that are used. And that Schedule 1 is the same for both residents and non-residents. Same for Schedules 2 and 3. Schedule 2 is additional taxes. Not very common for us, but if they had a retirement account and they took money out of it, right, and there was a penalty for taking money out because they weren't old enough to be retired yet, then they would have some additional tax shown on Schedule 2. Schedule 3 is additional credits and payments. Again, kind of theoretically possible, but very unlikely that we would see any of those, but that's where those additional credits and payments would show up. Schedule A is itemized deductions, right? So that's going to be a big one. Almost all of our clients are going to have Schedule A's. The only ones that won't really have a Schedule A are our friends that are students from India or business apprentices from India. Schedule A is going to be where they put their state and local income taxes paid, as well as any charitable contributions. Schedule NEC is the not effectively connected income, right? That's our dividends and our stock sales, if anybody has any of those. And then Schedule OI, that's the one that everybody does as well, 1040 NR and OI, those always happen. Those include things like residency information. It also includes treaty exempt information. So if there's income that they don't have to pay treaty tax on because of a treaty, then that's where that goes. And it's always going to be included with that 1040 NR. For those other ones, we're only going to send that with to the IRS, or you should send it to me if it's required to be included, right? If there are numbers on that form. If it's all blank, if there's nothing that applies, then we're not going to send that form in. And remember that Form 8843, I didn't list that here because that's not like a standard part of the tax calculation, but it's always going to be included if somebody is exempt from the substantial presence test, right? Because the purpose of that form is just tell the IRS, hey, I'm here, I'm on an F or a J visa, right? These are the number of days that I don't count for the substantial presence test. Like that's the big punchline of that form. It's theoretically possible for it not to be included, but most of the time it's going to be there. All right, let's talk about tax return due dates, right? So taxpayers are on a calendar year basis. So January 1st through December 31st, 2025, not per job, not based on an academic year. We get a lot of questions about that. Returns are due no later than April 15th if you had taxable wages. So some years it is delayed a little bit because of holidays, right? If it's a federal holiday on Monday, April 15th, they will delay it until Tuesday, April 16th or Wednesday, April 17th. But generally it's the 15th and it's going to be right on that schedule this year, which is nice. If you had no taxable wages, your tax return is not officially due until June 15th. This would be somebody that, for example, had a taxable scholarship and that was their only income. We are going to still try to encourage from a matter of our perspective to get everybody to file by April 15th because our tax clinics wrap up by April 15th, right? Everybody has finals and then it's summer break and you're all off doing fun things. So we are not holding all kinds of tax clinics on June 13th to help everybody that didn't file then. So we want them to file by April 15th. They should have the information they need, but officially it's not due until June 15th. And as a reminder, dates are always going to be kind of that month, day, year convention. So keep an eye out for that with our clients because sometimes they switch that up. All right. Hopefully, we will be electronically filing almost all of our forms, and there will be a very, very small number that have to get mailed in. If they do have to get mailed in and you're not sending money with it, it goes to the Department of Treasury down in Austin, Texas. If you are enclosing a payment, then you have to send it to this PO box out in Charlotte, North Carolina. Note that this is actually when you're like including money with the return. So if you like pay online, but you paid online and you're not including money when you file your return, you'll still send that down to Austin, Texas. We do generally recommend that people use something like USPS Priority Mail or FedEx or DHL or UPS, something like that, so that they have proof that the returns were delivered, right? The IRS is not fast at processing paper returns. So 2 months, 4, 6, like if things go really badly, 12 months, sitting there going, hey, did the IRS get my forms? When am I going to get my money, right? Maybe not even entered into the system yet. It's just sitting there in a big, huge pile of mail. So knowing for absolute certain that it was at least delivered to the IRS is good to know. And yes, it's like $7 extra, but hopefully not beyond anybody's ability to pay. Although we can e-file almost all federal returns, there are some state returns that we can't file electronically. Generally, that's going to be for individuals that are married, because a lot of the states require that the spouse have a taxpayer identification number when you file your tax return as married filing separately or married filing jointly. And the software for non-residents, right, you file separately. You never need a spouse to file for a federal non-resident. So the software doesn't even let you enter anything in there. In addition, there are a few states where if you are filing a federal 1040 NR, they say, nope, we don't want to take electronic copies of those for the states. You just have to mail them in. So we will let all of the people in those states know when that happens. So there will be more people that file paper state forms. Almost everybody should still be able to file federal electronically. All right, let's talk about the money stuff. So if you owe money, the IRS is very, very happy to make it very easy for you to pay. You can pay with a check. You can pay with a direct withdrawal from a checking or savings account. You can pay with a credit card online. They do charge extra fees for that. You can do an installment plan as well, like it's a lot of money, you can't pay it. You can pay it over time. They do charge interest or possible penalties to do an installment plan. They also may charge a fee to set it up. So generally, unless it's like a really big amount of money, it's better to just like pay what you can and just pay it on your own schedule. But absolutely, they can set up an installment plan and do that. It's very easy to do. If you're going to get a refund, so the IRS considers an overpayment. If you have an overpayment, right, you paid too much, and then you could either say, keep it till next year, or you can say, give it back to me as a refund. Everybody almost always says, give it back to me as a refund. So one of the new things, it's not officially like the OB3 law, but it's part of one of the executive orders, basically is that they are no longer wanting to send out paper checks for receiving refunds. So direct deposit is, quote, required under the new administrative executive order. I forget which number it is. The advantage, right, is it is truly faster, right? The money does come a lot faster. It's great because your bank account doesn't move. So even if you as a college student, you're living in one place in the spring when you filed and you're in a different place over the summer and an even different place in the fall, right? Your bank account is always there for you. It doesn't move, which is great. If you want to be crazy, you can split it between multiple accounts. There's a form you can do that. Theoretically, there are going to be other ways to get your money besides having it directly deposited into a bank account that's here in the United States. They haven't really defined those yet. There supposedly will be some sort of an exception process where you may be able to get a check, although it's not really been, they've not told us what you need to do. It's possible they might send a debit card rather than sending a check. We will find out more as we get closer to the start of the tax season. I can say that on that Form 1040 NR, in the back at the bottom, right under the refund area, it does still have a little line that says, if you want to receive a check to an address outside of the United States, you can put your address there. So that may be like the saving grace of if you want a paper check, put your address there. But we'll find out exactly how that is supposed to work here in the next couple months. All right. So I'm going to do another reminder about scope, right? I would love to help everybody, but we are not able to do that, right? Our goal is to help as many people as we can and focus on those who need our help the most, right? So an individual that has income of $10,000, I'm going to say needs our help more than an individual that has an income of $100,000, right? That other individual should have the resources to be able to purchase software or pay a knowledgeable preparer if they need help. We're going to focus on the low to moderate income individuals. The IRS puts limits on us, what we can do based on their circumstances, such as dual status aliens, the type of income, such as cryptocurrency. And so when we talk about our scope statements, I will always put those items in red, right? To make it obvious, like the IRS says we can't do this, it's a no-go, we're not going to be able to do it. TaxSlayer has some limitations built in as well. I'll put those as purple. If you are colorblind and you can't tell the difference between those, please let me know. I will help you work through that. Apologies if you are. For some things, you need dual certification, right? It's not enough to be foreign student certified. You also have to be foreign student plus advanced certification. We'll identify those items in green. And then there are some things that we put a limit on at our clinic as well, right? And so our primary thing that we do is we say that you have to have a school, nonprofit, or government email address. And the reason why we do that is because F1s and J1s are our primary customers. Those individuals are brought here to the United States by schools, nonprofits, and governments. So there are many, many, many Vita clinics, hundreds, probably thousands of Vita clinics around the United States. Most of them, their criteria is you're physically located in this place and your income is below X threshold. So we pass people to other Vita clinics all the time. If they don't have a qualifying email, that doesn't mean they can't get free help, right? It just means that maybe we won't help them. Here's another place that they can go. And that'll be great for everybody on both sides of that. All right. One of our challenges, right, is that the tax software itself, right, that software will do things that are out of scope for us to help with, right? It will do cryptocurrency. I'm not going to teach you how to do that, but I'm sure you could figure out as we get through here how to do cryptocurrency, right? So the software will do that. And we'll be happy to tell our clients, hey, like go to the IRS website. It talks about all of this. You can learn how to do it. You can enter it in yourself. But we can't tell them how to do it, and we can't tell them that it's correct or not. We also can't recommend a paid preparer, right? We can't make any money on this. We can't send them to anybody that's going to make any money on them as well. All we can really do is point them to trusted resources where they can find the information to help themselves file correct returns. All right. Here's our scope statements again. So lots of things are in scope. Capital gains is that big one, right? Anybody doing stock transactions, they need both advanced and foreign student. Out of scope are income-based, some types of treaty benefits, some state income tax returns, right? We don't train every state, all 50, well, no. There's like 7 states that don't have a state income tax, but we don't train on 43 different states. So the software will do it, but I'm going to take a big flying leap and say we're not going to train on New Mexico tax software. We don't know the rules in New Mexico. We're not going to help probably for that. Unless we get a partner there, then maybe we'll change. But for now, they and many other states are out of scope for us. The IRS says we can't do self-employment income or income outside the United States or cryptocurrency. Our software doesn't do prior year returns. It doesn't do, well, we have some limitations on amended year returns as well. So we are looking at doing some support of prior year and amended year returns with our traditional model. That'll probably be on a very limited basis. But for now, at least for the majority of our clients, that is going to be out of scope. All right. So let's talk about this for just a couple minutes. Like, what do you do if you're not sure about a tax issue? What do you do if you're taking the test and you don't know, right? So at that moment with the client during the test, right, look to the reference materials. Publication 4011, tax layer guides. We'll talk about those a lot come spring, January, February. Other forms, the instructions, the publications, 519, 901, all that kind of stuff. We designate 1 to 2 experienced volunteers at each event whose job is to answer volunteer questions, right? Especially at the beginning of the tax season, right? It's your first time doing it, second time doing it, right? There's a lot of new questions. You're not really sure. That's totally fine. That's why we have some experienced volunteers out there to help you have some resources to double check yourself. Look for your site coordinators, right? They're going to be wearing the red shirts. Send the client to our tax expert, right? So myself and a couple of other folks, we provide email support at the taxhelp@nrtaxhelp.org or like a unique partner like nrvtap.taxhelp@nrg. It's not ideal because, right, we're going offline. That's going to say we can't help you that day. But if it's an area that we don't know the answer on, right, it's more important to wait to say, look, this is important. We want to make sure that you don't pay any extra tax, that you file your forms correctly. You need to please email them and then we will get back to you, right? And if we don't know the answer, right, that's when we can call our resources at the IRS or the Minnesota Department of Revenue or New York Department of Taxation or wherever it is to say, okay, how should we handle this particular question? So we have additional resources to help our clients. If the question is kind of for you, right? You're like, yeah, we have this thing and I'm not really sure, this is what we did, but what would happen in if this was the facts were adjusted this other way, right? Just send me an email at the volunteer@nrtaxhelp email. Happy to talk about whatever scenarios or, questions that you might have that you're trying to learn about. Okay, all right. Is everybody, would you like a 5-minute break now? Are we still doing pretty good? We've probably got another 30-ish minutes or so, something like that, 45 minutes. Keep going. I think everybody seems like I'm seeing thumbs up for going. So everybody online, hopefully you can keep on with us as well. All right, so let's talk about the form that we're going to do some taxes. Yay, we're gonna do, sorry, I fell out of stuff. Okay, so the first thing that's gonna go on a tax return, right? The person's name, and then we're gonna need an identifying number. It's called a tax identification number, or TIN. Most of them are social security numbers, which means that that person is authorized to work based on their visa status. Sometimes they might have an individual taxpayer identification number, which means that they're not authorized to work, but they still have to file a tax return because they have US income. This is very common for people that receive taxable or treaty exempt scholarships, but they do not work. So student athletes are a big one. Sometimes PhD students, if they're on a fellowship, they will also be in that position. The most important thing to know here, right, is that the IRS is only going to issue an I-10 when an individual is required to file a return and is not eligible for a social security number. We get people saying, oh, I want to get a credit card, but I need a tax ID number. Can I get an I-10? No, that is not a reason that the IRS will accept for issuing an I-10. It's got to be you have income, you need to file a tax return, or you need to be included on a tax return form, such as if you're filing a joint return with it. All right. The I-10 can be tricky. It takes theoretically 2 to 4 months, maybe 2 to 6 months based on the shutdown and all of that kind of stuff. There's a bunch of additional documents that are required to be included, including a Form W-7, which is like the official application form. They can either apply as a part of their tax return, or sometimes people can apply using an exception method. Sometimes schools will help their students with this. Other times they don't. Students in that case, if they need an I-10, but their school doesn't help them, they can pay for a CAA. They can go to the IRS. The IRS will do this service for them. It's free. There's limited availability, but they don't have to pay. We also at North help as well. So if you find anybody that's in that place, they can email us at i10@nrtaxhelp.org, and we will help them with that as well. So the IRS is just really picky about this paperwork, and it takes a long time, but we can make it through it. All right, so name, taxpayer ID number. The next one is filing status. So for non-residents, they have a smaller set of options. Basically, single or married is really all it is. And when we say married, right, it means married under their laws of their home country. So we don't care like who their spouse is. We don't care where their spouse is, right? Married is married. So the joke I always used to say, right, is if we asked your spouse, were they married? Would you want them to say yes? If you want your spouse to say that they're married, then you should also say that you're married. But really, it's just if you're married, you're married. All right. There are a few other versions. There's a trust return or a filing status, which is completely out of scope and not us. Likewise, there's an estate one that's out of scope and not us. There's also this qualifying surviving spouse. Theoretically, it's possible that this might happen to us. This would have to be an individual that was a resident of Canada, Mexico, a student from India or South Korea. They would have had to have been married. Their spouse died in 2023 or 24 and they didn't remarry. They would have to have a child that they can claim as a dependent, plus a bunch of other criteria. Highly unlikely, but if you find somebody that seems like they might qualify, you're welcome to try to talk them through some of that criteria. I think it's in the 4011. If not, it's definitely in the Pub 519 about that. The thing that's really important is the filing status determines the tax rate schedule that's used, as well as the eligibility for some credits. Remember, I said that there were a bunch of credits that you can't claim if you're using that married filing separate status, and that's why. All right, there's a checkbox, digital assets. At any time during 2025, did you A, receive as a reward, award, or payment for property or services, or B, sell, exchange, or otherwise dispose of a digital asset or a financial interest in a digital asset? Yes or no? So if somebody only bought virtual currency, that would actually be a no, right? If you gave cash to buy, Bitcoin or something like that, that is not a yes to any of those questions. But if you sell any of those things or you exchange, I sold this Bitcoin to buy this Ethereum or whatever it is, right? Those would be yeses. So checking a yes probably means that they're going to be out of scope, but we should ask why they said yes just to try to make sure. And there will definitely be some yeses. All right. So when we talk about cryptocurrency, right, the challenge for this is that the IRS does not treat it like currency. They don't treat it like dollars or euros or anything like that. They treat it like property. The best kind of example of it is stocks. So if you buy a stock, you've got, now I own one share of Meta, for example, right? And then if I sell that share of Meta, right, I have either a gain or a loss, right? Because I either sold it for more than I paid or I sold it for less than I paid. And based on how long I held it, it could either be a short term or a long-term gain. If you only buy it for cash, that's not a transaction that's taxable, right? Because nothing has happened to it. It's only when you actually do that sell, when you make the, when you realize the gain or the loss, that it becomes taxable. So it becomes complicated, particularly for virtual currency and digital assets, because a lot of the reporting requirements are not there, right? These transactions are all in people's wallets. And like, okay, I sold this much, but how much did I pay for this particular amount? It gets very, very complicated, and that's why it's all out of scope for us. So we will not have to worry about it. All right, let's talk about dependents. That's kind of the next section on the 1040 NR form, dependents. And the big thing to know here, right, is a spouse is never a dependent, even if the client is providing all of their support. And this is pretty confusing because the individuals are here as a dependent visa. So they're here as a dependent visa, but dependent for immigration purposes is different than dependent for tax purposes. Sometimes children can be dependents, right? They're always going to be dependents probably for visa purposes, sometimes for tax. This is that same, right? But they've got to have that handshake. The client or the taxpayer has to be from Canada, Mexico, student from India or from South Korea, so that they can claim the child, and the child must be a US resident or resident alien, have a social security number. If they're a resident alien child, they can get an I-10 again. They must have lived with the client for more than half of the year, not provided more than half of their own support. So possible to happen, definitely, but not, we see half a dozen of those in a year, that would be a surprise. All right. So exemptions. So a lot of the things that we talked about for adjustments and deductions were based on money off your taxes based on what you spent. Exemptions were a money off your taxes based on people. Basically, if you had dependents and spouses, you could reduce your income. This was reduced down to 0 in the 2017 Tax Cuts and Jobs Act. Theoretically, with I think the one big beautiful bill, it's been extended for good. We'll see how it goes. They're kind of still listed in the IRS code, but they're still listed with a 0 value. So you can't really put anything on the forms, even if you wanted to. So sometimes, though, there will be exemptions in state taxes. So if somebody can claim a dependent, even though it doesn't reduce their tax as a dependent exemption in their federal return, there might be a state benefit to them. So that is why understanding who can be claimed as a dependent or not, it's one reason why it's still really important. All right. So that's the intro to all of the forms. So what we're going to do next is we are going to look at filling out some of these forms. So I am going to fill out some forms for Lisa and Sunil. I am going to fill them out by hand. You are going to practice them, not Lisa and Sunil. You'll do a few more examples. You're going to practice them by hand as well. I will tell you that when we get to the actual tax clinics, you are not going to be filling out forms by hand. The software will do that for us. However, the software is not really user-friendly, right? You can get through it, you can get a correct return, but it's very manual. It doesn't help you with that process. Sometimes you have to enter some stuff that's actually kind of wrong to get their forms to come out right. And so because of that, you don't have to use the software to pass the IRS test. And rather than trying to learn tax law and software at the same time. We're focusing on the tax law here in the fall, get you through the IRS test, and then we will spend some time doing software and states in the spring. Much of what you're going to do in the tax clinics is actually not even going to necessarily be in this software. You're going to be taking a look at a form and some income documents and saying, okay, is this return correct? I look at these forms and I ask the questions. Hey Lisa, what country are you from? What type of visa are you here on? When did you come? Okay, yep, this all looks good. Yes, everything is correct. Lisa, you can go ahead and file. That's a lot of what you're going to do. You're going to get to practice that a lot more in the spring as well. So this is Lisa. I have added a little bit of information from the last time that you saw her scenario. So she is an F1 student from China. She came here on August 1st, 2023. She went back home over the summer, 5/31 through 8/31. These are her count of days. That should be correct. She worked on campus in 2025. She also came to visit us last year at our tax clinic. She was here in March of 2025. She had a 2024 W-2 that showed she had paid $750 in federal tax, $350 in Minnesota tax. She filed her federal tax return. She claimed the treaty for wages, and she got a $205 refund from her federal return. Then she filed a Minnesota return, and she had to pay additional tax. She actually owed an additional $107 when she filed her Minnesota return. So Lisa was not the happiest with us when she left last year, but she's back again. We're going to help her again this year. She's studying accounting here at the U of M. This is her information. All right. And now we also have her income documents. She received two. She received a 1042S from the University of Minnesota. It has an income code of 20. It shows a gross income of $5,000. And then it's got a little bit of her information in here. A real 1042S form would have more information entered on the form. I have entered kind of like the bare minimum that you'll need to enter it into the software or to prepare a correct return. So everything that you need is on here, even though there's a bunch of information that are blanks that are missing. Lisa also got a W-2, right? So she was working on campus. Her W-2 said that she got $8,400 in wages. She had $840 of federal tax withheld. The university shows no Social Security or Medicare tax or wages, right? That was all blank, which is great. We know that Lisa's a non-resident, so that's perfectly good. She also had to pay some state tax. She had the $8,400 of wages, and she paid $449 in state tax as well. All right, so when we start with Lisa, when I start with any client, particularly kind of at the very beginning when I'm first learning, the first thing that we want to do is we always want to look at, like, what was her total income? Like, what are the different types of income that she had? How much total income did she receive? So let's look at Lisa's scenario, right? So she had $8,400 of wages that were reported on a W-2 form. She also had an additional $5,000 of wages that were reported on a 1042S, right? Because income code 20 stands for wages earned by a student while studying or training. So that means that her total income for the year was $13,400. If we look at our 4011 on the treaty pages for treaty benefits for studying and training, we would see that the treaty benefit for students from China is $5,000, right? So she has $5,000 of wages that she doesn't have to pay tax on. That means the amount of income, wage income that she has to pay tax on is $8,400, right? So Lisa is a simple, easy example because her treaty benefit matches what is on her 1042S, right? That's wonderful. That's like that a lot of the time, but it is definitely not like that all of the time, right? For her to get that 1042S, she had to go to payroll and sign a form 8233 that says, I am Lisa and I am from China and I claim this treaty and I'm eligible. Some students or teachers or researchers, right, they start work before they complete those forms, or they never even complete those forms, right? They never even go in and tell payroll that they have this treaty benefit. They would get all of their wages reported on a W-2. Sometimes they can work at two places, right? If they filled out that form, like two different schools might say, oh, sure, yeah, $5,000. You don't have to pay taxes on it, right? But that $5,000 is per year. It's not like per job or per school. So there's no double dipping, right? The IRS is very, very unhappy about double dipping. So it's the treaty benefit per person, not per job. So the 1042S forms might not be reality. So when you're looking at this, right, the way that I would suggest is look at the type of income. So wages here, you do the same thing for scholarships. Add up all of the types of income across the different forms, find out what the total income is, subtract whatever treaty benefits they have, and find out how much you need to report as taxable income on the 1040 NR. A couple other random things. So like the copy of the form is like ABCD. That generally doesn't matter. Sometimes for a W-2, if they work in multiple states, they can get like 6 versions because it's like the W-2 for Minnesota and the W-2 for Illinois. But mostly the copy of it won't matter. If they did work in multiple states, there's always going to be like a total state version. Then they'll have the breakout by each of the individual states. Okay. So when we fill out the forms by hand, this is the order that I would always recommend that you do. Start with the form 8843 if you need to do it. Go to the Schedule OI, Schedule 1 if you need to, and 2 and 3 if you need to, Schedule A, Schedule NEC, then do the 1040 NR. The reason why is that all of those forms will tell you, enter the information from this line on line blah on Form 1040 NR. Or Form 1040. So it'll tell you, hey, transfer this number to that main form. So that would be what we want to do. All right. So with that, give me 30 seconds here to go find forms. All right. So we're going to start. I'm going to get my list up here. We're going to start with Lisa's Schedule OI because we already did her 8843 last time, so we don't need to do that. So we're going to do this. So we're going to use the draft forms, right, which is not probably pretty close to what it should be. We'll say Lisa. All right. Okay, and I'm going to grab one of the scenarios so that I can what that is. Okay. All right, so this is Schedule OI. So it starts with name and identifying number. Lisa, her number is all ones. All right, what country or country was she a citizen or national of during the year? It was China, right? What country is she a resident for tax purposes? It is also China. It is never going to be the United States, remember, right? These people are non-residents. They're a resident of the United States. They shouldn't be filing this form. They should file just a standard 1040 return. Have you ever applied to be a green card holder? No, she has not. Was she ever a citizen or a green card holder? No. No, 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 no. Yes, if you had a visa on the last day of the year, enter your visa type. She is an F1. Have you ever changed your visa or your immigration status? No, she has not. So we just say no, no worries. All right, list all dates you entered and left the United States during 2025. All right, so we put the first date that she was in the US during 2025 here, which, all right, she went home over the summer of 2024. She was here for all of 2025. So the first date that she was here in 2025 is January 1st, 2025, right? Even though it's kind of not really an enter date, but it's like the first day that she was present here in the United States during 2025. And it's only 25. We don't do prior years, no 24, 23, only 2025. And she never left. She never went anywhere, right? So we don't have any departures. We don't have any other arrivals. Just 1/1/2025. All right, now we're going to do the number of days that she was here during the year. 153, 275, 365. Did you file a tax return for any prior years? Yes, she did, right? She filed last year for the first time. She filed a 2024 1040 NR form is what she filed. Is she filing for a trust? No. Did she receive more than $250,000 of compensation? No, she did not. All right. Does she have any income exempt from tax? Yes, she does, right? Because she has her treaty benefit. So we're going to fill out table L1 to say how much money she can exempt from tax based on her treaties. So her country is China. And now I'm going to go get my booklet because I can't remember what the article is off the top of my head. All right. So she is a student from China. So I'm looking at the countries with treaty benefits for studying and training, code 20. For China, tax treaty article is 20C. All right, number of months that she claimed it in prior tax years. I am going to say 12, right? Because she filed a 2024 return, which covered 12 months. So 12 months. And then the amount of income exempt in the tax year, right? If we go back to this, right? Her treaty benefit is $5,000. So we're going to say $5,000. That was the only treaty benefit that she had. So we don't put anything here. Total, enter this amount on form 1040 NR, line 1K. Do not enter it anywhere else. All right, so let's go find our form NR. We're going to save this one here as Lisa. All right, 1040 NR, line 1K, which is right here, income exempt from treaty. So 5000. There we go. All right, were you subject to tax in a foreign country on this income? No, she didn't pay any tax on it. It doesn't matter, yes or no, like it is whatever it is, right? If she pays tax, she does. If she doesn't, she doesn't. It's no big deal. Are you claiming treaty benefits pursuant to a competent authority determination? No, she doesn't have any sort of IRS letter saying she doesn't have to pay tax. And these bottom ones here, M, this is about if you are a non-resident and you own rental income, rental property here in the United States. So those are going to be blank. And that is Lisa's form schedule OI is all it is. So basically information about her visa, her country, some day stuff, treaty benefits is really all it is. All right, so now let's look at her. What are we going to do? Let's do schedules 1, 2, and 3. Let's take a look at those really quick. So schedule 1. All right, so this is additional income. So we're going to just take a quick look through here to see if any of these things apply to her. Does she have a 1099K that was in error? Nope. Does she have any taxable refunds? No, she does not, right? She had bad news last year. She did not get a taxable state refund. She had to pay extra money. So she is not happy and she is not getting a refund there. No alimony, no business stuff, no rental, no farm, no gambling, no jury duty, no stock things, no Olympic medals. That would be super cool, but no scholarship and fellowship grants on line R, right? That would be one that we could potentially see very frequently, but Lisa doesn't have anything like that, so we don't need to do it. No digital asset stuff, nothing else. All right, I'm seeing nothing there for additional income. Let's look at adjustments. Now, educator expenses, reservists, health savings, self-employment, alimony, student loans, jury duty. Yes, like again, right? None of these things apply to Lisa. None of these things apply, right? Student loans would be the one that we could potentially see, possibly an IRA deduction, but generally they're not going to be anything here. So Schedule 1 is a bust for Lisa. Let's go look at Schedule 2. Get a little bigger so you can see. All right, Schedule 2. All right, additional taxes. All right. Lovely. So premium tax credits, right? If you got Obamacare credits. Vehicle credits, clean vehicle credits. I don't even know what net EPE is, in total honesty. That's definitely not going to apply. No self-employment tax, no Social Security taxes on unreported tip income, no household employment taxes, no investment taxes. Yes. No interest on tax due for installment sales of timeshares. Nothing like that. All right. Additional tax on HSA distributions. No, I don't see anything there. Yes. No golden parachute payments. No look back crazy things. Nothing like that. All right. Yes. I don't see anything in here for Lisa as well, right? All of these things are like hypothetical, but they're not going to affect Lisa. They're not going to affect the vast majority or basically all of our clients. Let's look at Schedule 3 just to check it out. Non-refundable credits, foreign tax credits. So like if she did pay tax in her home country on her income and she paid tax here, then she could maybe get a credit for it, but that would be pretty unusual. Child and dependent care credits. Again, that's right. Canada, Mexico, India, South Korea, not married, but you have a child. You pay for that child to go to childcare. Education credits, not allowable. Retirement savings, possible, but she didn't do anything like that. None of this other stuff. No clean vehicle, no mortgage interest, no credit to holders of tax credit bonds, nothing like this. Nothing. That's just a one pager. All right, so schedules 1, 2, and 3 are a bust for Lisa, right? She doesn't have anything like that going on. So let's move on to Schedule A. All right, Schedule A for Lisa. Let's see if she has anything here. All right, Schedule A, state and local taxes. Did Lisa pay any state and local taxes? What do you guys think? Yes, I see some nods. That is exactly right. She did. So that means we're going to fill out this form for her, right? This is great. This is going to reduce the amount of tax that she owes. Lisa, 40 hour. Okay, so name at the top. Identifying number, which is her tax ID number, Social Security or ITIN. She's got a Social Security number. All right, so state and local taxes paid. All right. Who thinks that her state and local taxes paid, I'm going to find her information, is $449. Would anybody like to raise their hand and say, yes, they think that's right? Or not raise their hand and say, no, we don't think that's right, or we're not sure. All right. That is correct, even though people may just also be shy. The reason why is that, so that $449 on her W-2, that is the amount that she paid in state tax. Her employer took it out. They sent it to the Minnesota Department of Revenue on her behalf. But she also had to pay an additional $107 of tax when she filed her Minnesota tax return last year. So we are going to add those two numbers because we're adding up all of the state tax that she paid during calendar year 2025. So 449 plus 107 equals, my math is right, 556. Hopefully somebody will tell me if my math is wrong. All right, so enter the smaller on line 1A of 40,000. If Form 11B is more than that, see instructions. It is definitely not bigger than that. So 556, super easy. Gifts to charity, right? So she did not make any gifts to charity, but if she had made a gift, if it was money, we would put that on line 2, right? They say cash or check, but like credit card, debit card, all of that stuff counts. That's still a gift of money. Gifts other than by cash or check. So that is basically things like you donate clothes or a car or like some objects. If you made gifts of more than 250, you have to see instructions. And then if it's more than a certain amount, 500, there's an additional supporting form that you have to include. She had nothing, so they're going to be blank. Casualty and theft losses, right? Those are out of scope for us. No other itemized deduction. So she's really simple, 556. All right, enter this amount on 1040 NR, line number 12. 1040 NR, line number 12. Oop, it's at the top here. 556. Okay. All right, and that is Schedule A. Let's go look at Schedule NEC. Do we need to do anything there? All right, so NEC is the not effectively connected income, right? So this is all of the investment types of things. So dividends, capital gains, interest, royalties, gambling income, all of this other kind of stuff. Lisa, thank goodness, she's a pretty down-to-earth lady. She doesn't have any of these kinds of things, right? So we can ignore that. So all of these other forms, right, we don't need them. The Schedule 1, 2, 3, we don't need those. We do need the Schedule A because we've put some numbers on that. And we definitely need her Schedule OI. And we need her 1040 NR, which is our last form. So let's do it. So here we are, 1040 NR. So it says for year January 1st through December 31st, right? So we don't have to put anything here at the top. It is for the calendar year. Was not filed to pursuant to these things. She wasn't in a combat zone or deceased. So we're going to start with her name. So Lisa does not have a middle name. If she had a middle name, we would put the first letter of her first, if she had more than one, middle name. But she doesn't, so it's very simple. Her identifying number again. All right, home address. The trick for home address is that it's on her W-2 form, right? They mailed it to her. So apartment number 1. All right, it is in Minneapolis, Minnesota, 55145. Whoa, except that's not where I put that stuff, Maria. Minneapolis, Minnesota, 55145. All right. It's foreign country name, state, province, and postal code. You're only going to put that if the entire address is a foreign address. So if we have a client, right, they're here, they're graduating in May, they're going back home to their home country, that would be a good reason to put a home address back in their home country. Then you would put the name, city, town, put the foreign country name, foreign province or state, and then foreign postal code. All right. So Lisa is single. That is easy enough. She has no crypto or digital assets, so she's a no there. She has no dependents, so all of these are all blank. All right, so now we're going to enter her wages, right? And so here we're going to enter her taxable wage amount. So if we go back to here, right, we said her 8,400 was on her W-2, 1042S had 5,000, total income 13,400. 5,000 is treaty exempt, which means 8,400 is taxable wages. So 8,400 goes there. All right, she doesn't have like household wages, tip, all of these other things. Nothing, nothing, nothing. Here's the treaty exempt income, right? But that doesn't get added anywhere, right? We just say, hey, $5,000. Yay for me. I love it. All right. Line 1D, we add lines 1A through 1H, so 8,400. She doesn't have any of these other interest, dividends, all of those distributions. These are all for all effectively connected income, right? So a non-resident would potentially look at this and say, oh, I had dividends. I'm going to throw that on line 3A. Well, unfortunately, as a non-resident student or a non-resident teacher or researcher, those don't belong here on the front page of the 1040 NR. They belong on that schedule NEC. Same thing for capital gains down on line 7A. All of these things are all blank. Nothing, nothing, nothing. If we had additional income on schedule 1, that would show up here on line number 8, but we don't. So we're going to add the lines from above, 8,400. There we go. And when we don't have anything, we can just leave that line blank. We don't have to put a 0. And when we're entering numbers, we're going to just enter the numbers themselves. No commas, no decimal .00, no dollar signs. It's just 8,400, 5,000. All right. We had no adjustments. So her adjusted gross income is 8,400. We copy that same number over here again. Our itemized deductions were 556. She had none of these other deductions or exemptions. 12 through 13C, 556. So we're just kind of following the instructions as we work through. We subtract the lines. So my brain is not so good at this point in the day. So 8,400, 556 minus 7844 is her taxable income. All right. So when we are using the software, it will do all of the math for us to do the actual calculation for the taxes. For now, we are going to use the tax tables, which is like the very, very old school way of doing it. So, and the way it works is we say, all right, if you are single and your income is at least this, but less than this next column, this is what your tax is. So her income was 7844. So hide the panel. 7844. Let's go here. First column single. 7844. So she is here. So that means her tax that she owes is 783. So 783. All right. We don't have any extra taxes from Schedule 2, so it's just 783 again. There are no credits, no credits. Subtract line 21 from line 18. We didn't have any subtraction, so we're still at 783. Tax on effectively or not effectively connected income, that would come into here, but she didn't have any of that, so her total tax, 783. All right, so how much tax has Lisa already paid? Let's look at her forms. So on her W-2, we look, box number 1 had her wages, and box number 2 says how much tax she's already paid, which was $840. She didn't have any 1040 or any other W-2s. She didn't have any 1099 forms. She didn't have any other types of forms like that. If she had any tax withheld on her form 1042S, we would put it on line 25G. That would be there on like line number 10, which is blank. So she didn't have any tax withheld there. She didn't keep the money for next year. So all of these other ones, they're all blank. So we're gonna add, needed to add these lines here, 840. All right, so she has paid a total of $840. She owes tax of $783. So that means that today is a happy day for Lisa. She overpaid by $57. That means that if she would like, she can get a refund of those $57 sent back to her. And we'll say, yes, deposit it to my checking account. That's my bank account information. Off we go. If she owed money, if line number 33 was smaller than line number 24, the amount that she owes would go down here on line number 37 is where that would go. But that's her tax return form. All right. All right. Does anybody have any questions about that? Okay. All right. So I'm going to do it one more time just to kind of show everybody what it all looks like. And then we'll wrap it up here. Training, save, save. Okay, so our next one that we're going to do is we're going to do Sunil. Sunil is another one of our friends. He is a student from India. So let's talk about Sunil. So we're going to do the same sort of process here, right? We're going to start with his, theoretically, I should start with his form 8843, but I'm going to skip that and we're going to just do his schedule OI is where we're going to start. So his name is Sunil Gossain. His number is all nines, right? He is from India. That's where he is a citizen of. That's where he is a resident of. Never applied to be a green card holder. He was never a citizen or a green card holder before. He is an F1 visa. That's all he's ever had. He came in 2022 and he's been here the whole time. All right. It's never changed. All right. So I picked 2022 on purpose because I'm a really lazy person. So the first day that he was here in 2025 was January 1st. He was here the whole time. He never left for all of 2023, 2024, and 2025. So my math is very easy. 365, 366 because it was a leap year, 365. All right, let's see here. So he says that this is the first time that he's worked in the US in 2025, so he's never filed a tax return before. So this is a no. He's not filing for a trust. He did not receive compensation of more than $250,000. Yes, he would not say yes if he did. All right, let's talk about what we should put here for Sunil. All right. Okay, so Sunil has two W-2 forms, right? He worked on campus. Let's say he was working for his professor in the lab. He earned $16,000. He also had an internship over the summer. He worked at Cray Supercomputing and they paid him $28,000. So they really love him. They think he's amazing. They gave him lots of money. So he has two W-2s. Let's look at his income, right? So his total wages, we have 16 plus 28, that is $44,000. He had zero amounts of wages reported on a 1042-S. So his total income is $44,000. So the next thing that I would do is I would look here, countries with treaty benefits for studying and training, income code 20, and I would say, okay, how much wage income can he exclude from tax based on a treaty? And if I look at this table, India is not listed on this table, right? So he has no treaty benefit for wages. That's right. So he's going to have a zero treaty benefit. He's going to report all $44,000 of his income as taxable wage income. Now, Sunil does get a treaty benefit, right? It's just that it's not exempting wages from taxes. as a student from India, Sunil is able to take the standard deduction. All right. So he gets to take a set amount no matter what the type of income is, whether it's wages or scholarships, and he subtracts that set amount, that standard deduction amount, if that's more than his itemized deductions. So as we look at Sunil's Schedule OI, we are going to leave Table L blank because he's not exempting wage income or scholarship income by a treaty. He's going to claim the standard deduction, which is done in a separate area of the form. So that's going to be blank. There's nothing that we have to enter. He did not have to pay tax on this money in India. He's not claiming a competent authority determination. There we go. So Sunil's Schedule OI, right, is nice and simple. Eek, that's the wrong spot. All right. Now, let's talk about eek. There we go. All right. So we did this schedule. Let me go back to my list again. Where did you go? Here you are. All right. Schedules 1, 2, and 3. So, right. So let's take a quick look at this again, right? Does he have taxable refunds? Nope, because he never filed last year. If he claimed the standard deduction, then state taxes he paid wouldn't have affected his federal taxes anyway. So it wouldn't be taxable even if he had. He doesn't have any of this stuff. No rental income, no jury duty, no prizes, no scholarships, right? Nothing on here, right? Sunil is like not a complicated guy, which we can appreciate. We like that a lot. I'm not going to even go through schedules 2 and 3 again, but again, that would be someplace that you could look, or you would ask, hey, did you have any other income? Did you, pay any other amounts to the government or anything like that? That's where we could start trying to track that down. All right. Let's talk about Schedule A, itemized. Whoa, that's Schedule 1A. Wrong one. There we are. Schedule A for Sunil. All right, so Sunil has the choice. He can take the standard deduction or he can itemize, whatever is going to be bigger. And so when we look at this, the standard deduction is going to be that new amount, $15,750. We're going to compare that to how much he could itemize if he wanted to do that. So if we look at his state and local taxes paid, he paid $895 for his wages earned at the university, and he also paid $14.98 to the state of Minnesota for his wages when he was working at Cray. So that is $23.93. All right. He made no gifts to charity. He didn't have any casualty losses. He doesn't have any other deductions. He's got $23.93 of itemized or $15,750 of standard. Standard is going to be the way that Sunil's going to want to go, right? That's like an extra almost $13,000 of income that he doesn't have to pay any taxes on. So we are not going to fill out a Schedule A for Sunil because he's not going to itemize. He's going to take the standard deduction. That's going to be much better of an option for him. All right, so let's go to here. Here we go, let me do that. Let's try this again. Okay. Save this as Sunil. All right, I will put these examples out there for everybody on the share drive once we're done here. So. All right, same things at the top, right? We ignore the top. It's all not calendar year. He's not dead. He doesn't have a middle name. All right, his number is 9. All right. Okay, his home address from his W-2, 452 Eden Gardens Lane. That sounds lovely. Minneapolis, Minnesota, 552. Nope, 455. All right. He is a single guy. He has no digital currency. He has no dependents. All right, we're going to add up his wages, 44,000. No other types of income, nothing that goes on the treaty exempt line. It's all going to be blank there. 44,000. No other kinds of income, nothing like that. All right, so 44,000, 44,000. All right, so that's right. That's all that it is for Sunil. He's pretty simple. All right, itemized deductions or standard deduction, right? Here's where the fun comes in. We get to put a big number here for him. Doesn't have anything else there. 15,750. All right. That means his taxable income is 28,250. All right. And so if we look at this, if we looked at the table back here in our 4011s, you would see that this 15,750, right? That is like not quite double the very best trees, but like there are a bunch of trees that are like $2,000. Three, quite a few at 5. There's a few at 9,000. So those are like the best ones otherwise. But the students from India, right? They get quite a really good deal. All right, 28,250. Let's go find our tax tables. Where did they go? There we are, 28,250. Let's do it. Okay, here we are. So at least whatever's here, but less than whatever is in this line. So 28,250. All right. So at least this one, but less than this one. So it is not going to be 3149 because it is not less than 250. It is at least 250, but less than this. So it's going to be 3155. 3155 is how much tax he's going to owe. All right. No other things. No credits. He just owes 3155 in tax. All right, let's see what happens, right? So he paid $1,600. We look at box 2 on his W-2. $1,600 went to the IRS from his work at the University of Minnesota, and then $3,200 from when he was at Cray. So he's paid $4,800. I can already see, right? Sunil is going to love us. He is going to think that we are just amazing, most wonderful people in the world. Totally nothing that we did, but we'll take the credit for it. Okay, so he's paid $4,800. His tax is $3,150. So we $3,155. Pardon me. We subtract, and he sees that he has overpaid by $1,645. He is going to get a refund of $1,645. Life is happy if you are Sunil. Okay? All right. So that is the general process, right? When he prints it out, he would actually sign and date. He would say that he is a student here. And that's pretty much it. We would put our site ID number right there. That would say, hey, our Vita site helped you. Count this return for us. Don't need to worry about that for our practice ones, but just so you know, reality would show that. And there we are. All right, and that is Sunil's example. All right. Does anybody have any questions about these? Okay, so that is the end of our training for today. So we're going to take 2 seconds to talk about Moodle and homework, right? So Link and Learn is not live. Don't do anything yet. There will be a big announcement. I'll have like some screenshots or a little video demo of what to do when it goes live. For now, nothing that you need to worry about. When it does, remember, Your name must match your legal name on your government documents, and you get 2 tries to pass the tests, 80% pass rate. All right. As a reminder, you need to be doing your Moodle homework. So that's my assignment for tomorrow, is to reach out to everybody and say, hey, how are you doing on Moodle? I would say like a good half of you are like making really good progress, probably the faces that I see here today. In fact, I know the faces that I see today. But there are some folks that haven't done anything yet, and that's okay. You know, it's not like it's too late now or anything like that. But this is like, there's a rhythm to the training where you take the training and you do the practice and you do the training and you do the practice, so that when you walk into that test, everything is like really fresh and you know just what to do. So we want to make sure that you kind of get caught up with us so you're ready to take the test. If you're going to take it later, then that's fine. You can wait on it, but I'll be checking in with everybody to see how things are going. You have 3 more modules to work on. Module 7, well, actually 3.5. So the first one is the survey module. Let me know what looks good in your schedule for tax clinics in the spring, right? No commitment, just like a feel for what we know is going to work or not. And do it, do local time. So like if you're out in Washington State and I say like in the evening Pacific time, like it can be 6 o'clock, 7 o'clock p.m. Pacific time. That's totally fine. Or, 7 a.m. Eastern time if you're a morning person out on the East Coast. So what's your available? If you're an NRVTAP volunteer, let me know what you think about the 2 options for the volunteer readiness check. Whatever you want is good. It's completely your choice, however you would like to do that. Then you're going to do module 7. It's a quiz on deductions, adjustments, and credits. There's another quiz on finishing the return and filling out the forms. And then finally, you get to do some more assignments. You get to prepare returns for Harold and Nick and Sergio. And as a reminder, we're going to do them iteratively. So you do 1 set of forms, I will give you feedback. Then you do the next set, I will give you feedback. So it's not something that can be done in like 3 hours, most likely. We don't have anything for non-resident training next week, right? So our currently next scheduled get together is going to be on December 3rd in 2 weeks to take the foreign student test. So I will be emailing when Lincoln Learn goes live. If Lincoln Learn doesn't go live by December 3rd, I will be emailing everybody. We will probably postpone things and do it a little bit later whenever we figure out where we think it's going to be live. We will do resident training this coming Monday for our 3rd resident training session. All right. And I would say kind of a final encouragement, right? So have a little faith, trust in the process, right? Based on my experience leading volunteers through this, right? If you go through these modules, if you do the quizzes, if you do the assignments, you're going to be in a really good place to pass the IRS tests, right? And look, the examples that you do are also available to you as a reference for when you're taking the tests. So there's a lot of information that you're going to have to put you in a good place for those when the time comes. All right. That's the thing. We'll do a quick review. We'll talk about test practices, then we'll go from there. Then a final reminder, when we do have that test, we're going to do volunteer paperwork as well. I will need volunteer agreements. I will have to check it versus a government issued ID. We can do it like live in person. You can submit it in Moodle. We can do a Zoom, like whatever you want. All of those things are going to work. But one of those things has to work for you to volunteer. And with that, yes, you can take it on your own. Yes. Plan for next week. All right. I basically said all this stuff. And we're done. All right. Thank you, everyone. Thank you so much. All right. If you have any questions, please, I'll stick around here for a few minutes. You're welcome to stop and talk. You're also welcome to email me as well, and we will go from there.